Hello, everybody, and welcome. This is Tushar Chande. Welcome to an episode exploring the technical analysis of Nvidia after its wonderful results this week for the week ending May 24, 2024. Let's get started. A gentle reminder, there's risk of loss in trading, and past performance is not necessarily indicative of future results. Nvidia had been consolidating under the March resistance. After forming a low in April, it had been rallying into earnings. We had great earnings report on Wednesday, where Nvidia handily beat and raised guidance for the next quarter. So we had a gap up open and then a high close to 1060 or so, 1063. And then on Friday, we had a follow through with a new marginal high. But this is important because we have two lows above the resistance, and this is also a strong rally before a long holiday weekend. So all told, a great week for Nvidia. So let's see how the technical condition looks. The upper panel has daily data and the lower panel is the chats indicator. This is the Chande absolute strength indicator. You see that the bars have turned green because the value here has risen above plus 70 and now it's close to 100. So this tells us there's a strong trend. If you look back here, we were also close to 100 during this leg up here, and we are close to 100 again. So safe to say that we have a new upward leg underway. I've drawn these lines to indicate the different speeds of advance, and I found these strictly by drawing lines on the Nvidia chart at different points in time. So these lines show how rapidly prices have risen in the past, and starting with this low and the most recent high, you see we are rising at about the fastest rate we've seen historically on this chart. But remember that we could always come down and proceed higher along one of these other lines which are moving more slowly. The upper panel has daily data with three different trend lines showing three different speeds at which prices have advanced over the past year or so, and I've drawn them here from this low so you get a sense for how prices might advance for the next say few months or weeks. And then currently we are moving sort of a little bit above or at the blue trend line, which went from the January low to the March high. The lower panel has my momentum persistence indicator. I think of it as a green flag, red flag. So during this consolidation, we had some choppy movement and we went oscillated back and forth rapidly between green and red flag conditions. And then during the uptrend, we got up close to 100 and stayed there. Now we are back up to 100 again. So I take that to mean that we have an uptrend that could last for some time. This is the PALS indicator, the parabolic accelerating long stop. So here the orange line is a 10 bar highest high to trigger the start of the process. The dark line here is the lowest low of 20 bars, so this is the starting level. The brown dots are accelerating at some nominal speed, which is the slowest with a value of 1, and it could be much faster to a nominal value of 4. And currently this is approximately in the area of 887. So for example, if you think of the stop here or the stop there, we will say that the trend or the uptrend will continue until prices reverse and close below this stop. This is another model called the blast indicator, which is buy low with an adaptive stop. So here the orange line is the trigger line. Action above the trigger line after we have had a downtrend is a buy signal. This is a trailing stop, and that's around 882. So just like we said in the other slide, we'll assume that the uptrend is in play and in force until prices go below the stop. So this is the blast indicator converted into a swing system that actually generates buy and sell signals. So the up arrows are a buy signal and the stop sign is an exit signal. So here in the previous quarterly report, we got a buy signal. Then we stopped out at the trailing stop. Now we got another buy signal here after this weakness, and this is our trailing stop. So we'll continue grinding higher until prices reverse and hit our trailing stop. So this is my volume thrust indicator. It's above 50, so this breakout has occurred with good volume and volume support. And in fact, volume has been supporting the advance since this rebound began in mid to late April. And during this consolidation period, see how there was downside thrust to volume. That is, volume was actively pushing prices lower. So again, this is another signal, an indication that this is an advance that could be sustained for some time. So this slide reconciles the fundamental analysis and technical analysis. I have two price targets from a flag pattern and Fibonacci extension, which are a little bit above 1300. And after the strong earnings on Wednesday, many fundamental analysts have raised their price targets to be between 1300 and 1400. So this gives you a sense of the potential convergence between the two types of analysis. Of course, there's no guarantee that prices will actually get there or how long it will take to get there, but it gives you a chance to think about how you might handle your portfolio if the prices do get there. So it's very fashionable to use Cisco as the warning and or template for what Nvidia might do here. This all happened in the early to late 90s when Cisco had an extraordinary move, and of course then it eventually topped and then reversed quite dramatically. And since we don't know when it's going to top or when Cisco would have topped, you're better off just using a trailing stop. And let's see how that looks like for the moment at Nvidia. This chart is monthly data for Nvidia with a logarithmic scale. It shows that you can use the trailing stop to follow a multi-year trend, and you'll never get out of the absolute high of the move, but you'll get off early enough to avoid a major swing lower like we saw with Cisco. So the current trend is here. This is our trailing stop. So let's just follow it along and see where it takes us. All the tools I've used are at TrendSpider.com. I hope you like and subscribe, and thank you for listening.